And good afternoon, everybody. I'm Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Sunday, May 23rd, 2021. Well, the markets did initially rally on Friday morning, and that allowed us to put the tops in, what I believe are going to be the tops, for that wave B of the intermediate wave 4 decline, the correction that we're in the midst of. And so that would mean that thus far we have now completed wave A, we've completed wave B, and it looks like we're very cleanly on the starting path for wave C. Now, just to quickly review again, all C waves must be 5-wave structures. In this case, it's going to be 5-wave structure down. So that's wave 1 down, 2 up, 3 down, 4 up, and 5 down. So it may have on this opening lows that we saw in the early Globex session thus far, which has now been in force for about 2 hours. But we saw the low this morning, or this afternoon, I should say, excuse me, at 4142.50, and that may have completed this initial first wave down, wave 1 of C. And if that's the case, we're likely now seeing a wave 2 bounce. And you can run Fibonacci from Friday's highs to this early Globex low if you want to put parameters around with the possibilities of where wave 2 should go. Right now, though, I'm not doing that because the markets can easily just turn around and just continue to slide, put in an additional new low, and then we would be able to make a determination from there. Is it's 1, 2, or are we still dropping in that first wave 1 down? So what I'm going to look for tomorrow, I believe upside is going to be limited to corrective move. So a wave 2. I initially going to be looking for a continued downside. And what I've now done is I've run the Fibonacci extensions, which would then track for us where support and completion points should come in for the intermediate third wave. So with that in mind, we're going to find support very high level, but we're going to find support at 4,134, 135. And that might be just wave 1. So that would be more in tune with my expectations, what I think wave 1 should do. Should come down to here. Then we get the bounce. And then we start lower again. And wave 3 should maybe have a pause at 4,103.50, somewhere in that area, but more likely come down into 4,078, 4,080, and then bounce again in a wave 4, and then come back down in the finishing part of that C wave. Now, what we definitely going to be looking for is for a break below 4,029.25 to complete this C wave, and in turn, the intermediate fourth wave. Wow. I'm having a little trouble keeping my numbers together, but I apologize for that. So there would be intermediate fourth wave that we're in. Now, here's the gig. The most common relationship between a C wave is to the A wave. And that most common relationship is that wave C will be 100% it'll be the same length as wave A. And that comes in at 3,972.50. That certainly is below that 4,029. And it really presents a very clean case for where this market is likely to go. It has not been below 4,000 for quite some time now. And so taking a drift down there in a C wave could really shake things up a little bit and set the stage for a really nice bounce off of that to announce the intermediate fifth wave advance. So keep that in mind. We're just looking for a fourth wave correction. There's still a fifth wave up to come. And that's the one that I definitely, again, I'm going to be expecting a clean move above that 4,038 high that we saw, and then up until those upper reaches. And once we are finished with wave 4, we'll be in better position to start to notate where these are going to come. 4,300 definitely in the picture, folks, and much higher. We do have levels. If you remember, we have drawn this out before. We have levels that'll take us all the way up past 4,300 and of course 4,400. So there's quite a bit of rally still to come. And that then is going to set the stage, because that move, that final intermediate fifth wave up, is completing a primary fifth wave, which is completing a cycle level fifth wave. So ultimately, we're pushing to a major high, a major top, which is going to set the stage for a major correction in these markets, one that I don't think many people are actually looking for. But it's going to take a while probably to get up to these highs, and it's, we'll have to see how things unfold once that is complete. Normally, when you get into something that high, it's going to be triggered by a very massive news story. And there's plenty out there to choose from, but we're going to let the markets just do what the market's got to do. And we will then be looking at Fibonacci, we'll be looking at structure, we'll be looking at paths. And so that we are ready no matter what happens. No matter what happens, if it continues to go up, that's fine. We'll trade it and we'll be ready for it. If it starts to go down, that's fine too. We'll trade it and we'll be ready for it. For tomorrow, I'm looking for, we might see both a little bit extra downside, but then we're going to see some stronger rally. Now, right now, the Dow, for whatever reason the Dow's doing it, it's up 126 in the Globex session. That's now pulled the NASDAQ back into positive territory. And of course, now the S&P is closing in on being up $10. Not huge by any respect in terms of what we've seen. Very easily to turn around once the Asian markets really get going. And then once Europe opens, we'll see. But we do have an outside chance here that the S&P really wasn't done with this B wave that I've labeled, and will go up again and go above that high. That's not what I'm expecting, but again, as I say, stranger things have happened, and so you must be able to put aside what we think is going to happen to what is actually happening, so you're able to trade what is in front of you. And that's where we're going to start to use our moving averages, where we use Fibonacci levels. You can redraw levels. We can put different extensions on, which are going to continue to show where upside should be. And then we're going to draw it from here, the A down to the B, and that's going to give us our C wave. If the C wave is still in progress, C of B, if that's still in progress, then we're going to figure out where it could go. So you have that in mind. If we start to break higher, you're going to take off this particular Elliott extension and go back to the one that's going to measure A to C, and that's this here down to there, and that's going to give you your levels for the C wave. And that's where I'm going to leave it, because I'm definitely not looking for that this morning, but we will be prepared should it occur. And I'm actually looking for the market to continue lower and to start breaking towards these lower support levels. Next update will be Monday the 24th.